JK Paper, well, they have completed the acquisitions of two entities. That's Horizon Packs, which is the larger entity, and Securipax Packaging. That's what's going to be interesting because these two companies, in fact, the focus more is on corrugated paper packaging. To understand more about this, well, we're joined by Mr. Mehta, the President and Director at the company, who's joining in. Hi, Mr. Mehta. Thanks so much for finally speaking to us. We were trying to reach you yesterday as well, but good to have you on the show. Let's focus on this acquisition, and let's focus on the larger one. Horizon sales have moved from around 487 to around 741. I want to know what kind of utilization levels is it functioning at to get the 750 crores odd? At peak levels, what kind of revenues can you do? And also give us a sense on the margins of this acquired assets. I'm guessing it's lower than what JK Paper does, but give us clarity on that.
Thank you, Rajan. So in fact, we were studying the attractiveness in the paper and the light sector, and we found that the corrugated, the packaging, this sector is highly growth driven, and the growth is fantastic growth is there in this sector. The size is also very good. So when you talk about the Horizon Pack, it has 6 plants across the country, and the new project in the south, which has just started 2 years back, and the capacity utilization is something around 30–40%. So overall utilization, when you talk about the company right now, I think it is close to 60%. And there is a good avenue to increase the capacity utilization to close to 70%, 70–75%. And the Securipax is doing well. So put together, these two companies of 832 crore turnover, certainly the higher capacity utilization in time to come should add volume by both these entities.
So at 60% utilization, 60–65% utilization, you're saying they're doing the revenues of close to around 741 crores. So we presume that at optimum utilization, they could do close to around 1250 odd crores as well. Two-part question, sir. The first one is...
Just one clarification on this. This industry, the capacity utilization will never be 100%.
Yes. Okay.
Our study is that the optimum and the benchmark capacity utilization in this industry is somewhere around 75–80%.
So that means about 1,000 crores of revenues. When does that come by? And you spoke about the margins here, being lower than your overall margins. What are the synergies that you're factoring in? What do the margins at steady state optimum utilization look like?
See, in this industry, our study indicates that the range or the band is something around 6% to 14% sort of the EBITDA, because here the capex or the asset turnover is better. So we can't compare the EBITDA of paper industry vis-a-vis the corrugation industry. I would say that anywhere between 12 to 13% EBITDA would give a very good return on capital employed. So that is what I would aspire, and JK Paper is known for its the operational efficiency. So certainly, when we come into this play, we will better manage these assets and do better than all other players. And also, we will have a size and scale advantage once we are there.
So 12 to 13% should be the steady state margins you will be working with for both these two assets. That's HPPL and SPPL, right? And also, sir, just to clarify, 832 crores is what these entities did last year. You said 1,000 crores, that will be for Horizon. So both together, the revenue potential will be what? Around 1,150 crores?
Both together at an optimum capacity, Nigel, you are right. I mean, it should be somewhere around 1,100.
1,100 crores. All right. Just to clear out a couple of factors more, are you taking any debt from both these two companies? If you could give us a sense out there. I'm looking at it, Horizon had a debt of around 50 crores a couple of years back. Could you give us a couple of details over there?
See, right now, both these companies put together, they don't have a major debt.
Okay.
It would be something 60–70 crores both put together. And as far as the JK Paper is concerned, we don't have to take any debt because we have adequate the cash surplus available with us. So this will be totally internal accrual funded acquisition.
So you said 60, 70 crores is the debt on both these companies, and you have, what is your gross debt right now?
See, right now our net debt is close to 2,200 crore, and by end of the year we should be less than 2,000 crore is our number.
And this balance 15% stake that you are going to buy in these companies over the next 3 years, just wanted to understand, what conditions have you laid down for this? Is it going to be similar valuations? What are the business performance metrics?
See, it is very simple. I would say that what we wanted the existing and erstwhile promoter is to add value in this business, because they are the old veteran in this industry. And we wanted that we bring in our operational efficiencies and our management and the strength of the finances. At the same time, we wanted them to contribute from their business understanding. This is a kind of a partnership where both these entities should add value for the corrugation business, and the advantage 85% should flow to us and 15% should flow to them.
Okay.
So it's going to be a very good understanding.
Okay.
So just wanted to understand that, for the next 3 years, there would be a good partnership, etc. They will add value to you. But the remainder 15%, will you buy it at a substantially higher valuation? We're just, the street is worried about that payment coming 3 years from now.
No, it's not going to be a substantially different than what it is. We will buy it in 3 years' time. That is what our understanding is.
Okay, all right. Let's focus on the other part of business, Mr. Mehta. Your Gujarat unit is a packaging unit, right? And some reports were indicating that there's been some bit of a pullback out there in terms of capacity utilization levels. Tell us what's happening with your Gujarat unit. Have you all pulled back some capacity utilization levels? If yes, what kind of a volume hit can it be for quarter 3? Go ahead.
No, it's nothing. In fact, it's a misnomer, and it's misunderstood from the market. In fact, the ramp up was pretty fast, and it was a fantastic ramp up after the commissioning of this plant in January 22. And we have been operating at 96%. I could not imagine that a plant in just 4 or 5 months can operate at 95, 96% utilization. And right now also the plant is operating at 90% plus. So there's no reason for any kind of a volume downward thing or any capacity constraint or any other thing.
But
see, what happens
Mr. Mehta, we get that point. Once the plant got commissioned, you ramped up very quickly, which is good on the management. The only point is we want to clear it for our viewers. Have you pulled back? Are you functioning at a lower capacity utilization level currently at the Gujarat unit? And if yes, is it temporary? Is it par for the course and you're going to be ramping up in a short while? Please clarify on that.
No, there is no capacity reduction. This is what I'm clarifying. Right now also, as yesterday the plant was operating at 95%.
Okay, so then that clears the air. So there's no pullback, there's no volume loss from the Gujarat unit.
Yes.
All right, Mr. Mehta, thank you so much for joining in and giving us the outlook on this acquisition in specific and some about the other businesses as well. We hope to speak to you about the other parts